Welcome to the Inspire to Invest podcast, where we're sharing stories from real estate investors and how investing has changed their lives. This episode of Inspire to Invest has been brought to you by Dijon Properties. Hey everybody, welcome to the Inspire to Invest podcast. I have Darren Voros here with me today, and he played a pivotal role in my own investing journey. I saw him speak about 5 years ago at an event, signed up to receive more education, and now I'm part of his mastermind, Synergy, as you can see you guys had. To give you a little bit more detail on Darren, and I promise he sounds way better than I do. Give you a bit of detail and I'll pass the mic over to him. But he's got over 20 years experience in real estate, 250 plus stores, and a portfolio worth more than $30 million. He has been performing on stage and on TV for many years as well, an on-air renovation expert on The Goods on CBC and Cityline on City TV. I'll let him fill you in on all the great things that he's been working on. So thanks again, Darren, for joining me today.
Well, thanks for having me on. And I had, a similar loss of my voice a couple of weeks ago, so I totally feel your pain. But the good news is it doesn't last long. So a couple of days, you'll be feeling much better.
Absolutely. So I guess where I want to start, you obviously have this illustrious career in real estate, but what were you doing before real estate?
Well, it's when I talk about my previous life, I call it, people are often shocked. They're like, well, that's quite the transition. But I worked 15 years professionally in musical theater. So I was a singer, dancer, and actor. That was my full-time gig from pretty much the time I left high school until, around 2010. And so it was a really cool opportunity to travel the world, and I worked with incredible people and had a lot of fun. And on the side, I was doing real estate, in my later years, and then at some point I just decided I want a bit of a break from working nights and weekends and not having a lot of vacation time.
Yeah.
And that was when I started to look at an exit from theater and getting into some other things. So yeah.
So what was that catalyst? Like you mentioned, kind of like walking that line for a bit. Was there someone that encouraged you or something that you saw?
Well, it was, in terms of the exit from theater, is that what you're,
No, meaning like the catalyst into real estate, like somebody encouraged you to do that? Or did you just think, oh, this is like interesting to me?
Yeah, I worked over in Japan in 2002, and I was able to save up some money while I was working over there because they paid for our apartments and our train passes and bicycles and gym memberships, and we got a per diem and a salary bonus at the end of the year. So I never touched my salary the whole year, and I got a nice little bonus at the end of the year as well. So I came back to Canada and I had money, a little bit of money, like, at the time I felt like I was a millionaire, but yeah, it's a small amount of money, but I invested it. I bought a piece of property. I didn't really know what I was doing.
Yeah.
I wouldn't say that I was educated in any way. I kind of just thought, well, this is the only thing that I've heard is when you have money, you should buy a house because it's a good investment. Right. And so I ended up buying a property in Alberta where I grew up. I was living in Toronto at the time. So, that was a major thing for me. I think that a lot of people don't think of, and that's to buy your first property as an investment property, which is really what I did, because I had no intentions of ever living in Red Deer again. But I thought I was going to buy it and then finish the basement renovation because it was a brand new build, and then sell it and then take the profit and move on to the next one. And I didn't sell it. I kept it. I rented it out for 4 years. The market went crazy in Alberta. I almost doubled my money. And then I went and took that money and bought some property here in Ontario.
Yeah.
And that was really the catalyst for getting excited about being a real estate investor, because I was like, oh, I went from one property and and 4 years later, I bought 3 in about 6 months.
Yeah.
And that was where I saw kind of exponential growth. And I thought, well, this is a strategy that I could hopefully repeat, and got really excited about, the potential of real estate investing.
So then when did you start to really like dial it up then, like after you left theater?
Yeah, I mean, I didn't dial it up for a while. I was playing the game that most people play, and that is, you let equity build and you try to save some money. And then when you can, you refinance and take that equity and you apply it to a new property, or you take your savings and go and, have another down payment for another property. I didn't really understand how to leverage that well. I didn't really understand how to use private money. I didn't really understand how to, raise capital from external sources. I didn't understand any of that. So that took a while. I mean, not until probably like 2014, 2015 did I really start to understand those elements of building a portfolio. I had in that time, I started in 2002, bought my first house. By the time 2014, 15 rolled around, I had bought 6, and so that was pretty good, and then from that time, I've exponentially grown the portfolio every single year from that point. So, but yeah, the first few years were definitely slow and steady. But it was decent growth regardless.
Now, where did land development come into the equation?
Land development started just a couple of years ago, like 2.5, 3 years ago. And that was really because, well, I say that I've been in development for a while. I guess people think of development as like buying a raw piece of land and then, going and changing the zoning and doing that. But I think of development in a lot of different ways. I think when you take a single family dwelling and you create a basement apartment in it or a secondary unit, I mean, that's essentially development. You're adding another unit to the market. It's just on a smaller scale. One of the first pieces of development I kind of did was I took a single family dwelling, I tore it down to the ground, and I built up a legal triplex. That was the first one, that I kind of consider as experience in development. But in terms of larger scale developments, what I'm doing now, that started just 3 years ago when I saw an opportunity in the Toronto market of like, we have really good zoning in Toronto that allows us to basically do on a single family lot, anything from a single family dwelling all the way up to an apartment building. And then I saw the opportunity in some of these older established neighborhoods with larger pieces of land that I could actually do, like an 8-unit apartment building in a single family dwelling. And so that's where that kind of came play, and then that just sparked my interest on development in general and learning all about it, and then kind of took it from there.
Now, you've obviously got like really diverse experience with real estate in your career. So that being said, what do you define as your biggest success?
In terms of like the success of like a project, or in terms of like what I feel most successful about?
Yeah, like when you look back, like what are you most proud of out of anything you've done so far?
I think, the triplex that I just mentioned, I built that from the ground up. Like that was the first project that I had ever built myself. Like literally I framed it. I did all the electrical. I did all the plumbing. I did all the drywall. There was like, I think I didn't do the roof. And I didn't do some of the finishing of the drywall, but other than that, like I did install the kitchen. I mean, it was just, I did everything from top to bottom. And I learned a lot through that process. I learned that, you can only grow so fast when you're in there swinging a hammer every single day. But it was a really cool project. And I live in that house, or I live in a laneway suite next to that house. So I look at it every day, and it's kind of a nice thing to be able to say like, hey, I built that, and it's really well built, and it's a beautiful property in a great neighborhood.
Yeah, no, it's amazing. And obviously with the way that, the city has changed things, it's going to become the norm, right? So I think we'll start seeing that popping up more often. You talked just briefly about challenges. So what are some of the biggest challenges that you've experienced so far?
I think the biggest challenges that I've run up against is, just the ability to grow and scale. I think that's a challenge that a lot of investors have. And, it's also, I think the other big challenge is lack of education. I think I've been one of those people that in the past I've gotten a bit of education, and I've tried the trial and error sort of process, and that's not a great way to proceed as an investor. You can do it; it's expensive. It's a lot more.
You can learn from other people, hopefully, to avoid some of those challenges.
Yeah, it's an expensive way to learn lessons. So I always say, like, put that money into education, and trust me, you'll be glad you did, because, like you say, it's just a matter of learning to avoid other people's mistakes that they've already made. But also with education and with mentorship and things like that, you're not only paying for knowledge, you're also paying for speed, right? I mean, if I could teach somebody what I did in 20 years, and I could probably teach them to do it in 18 months, right? If they have the right tools. So that's the difference, I think, with, just maybe not, I was being a little bit naive when I first got started, or to be honest, I was being a little cheap, right? And just being like, oh, I can save money by doing it my own way and figuring it out by myself. But that's just my ego getting in the way, and my bank account getting in the way of not being able to take that next step forward.
Yeah. What would you say is like the biggest obstacle then? Like there's just general challenges, but is there one thing that you're like, this has been the biggest obstacle that I've had to work through?
I think, bringing in partners is always interesting and challenging. I have partners on multiple deals. I have JV partners, I have investors, I have all kinds of people that are external to me that are involved in my projects. And I'm grateful for that, for sure. It's allowed me to scale and grow. But, it has its challenges for sure. I mean, if you don't necessarily align on, what you want and your partners want, that's always a tough conversation, right? It's always a thing that you have to be like, okay, it's like any other relationship where you kind of have to manage expectations and figure out, what you want to do. But I would say those have been the biggest challenges. I think when it comes to building and developing and dealing with municipalities and things like that, that's just part of the nature of the game. But dealing with investors is always can be a tricky thing for sure if you don't see eye to eye.
Yeah, no, absolutely. And I think that's why sometimes it's also helpful that with partners, you have those agreements, because it's easier to discuss what the ending could look like before you're there, like when you're on good terms, right? So trying to foresee like the unexpected.
Yeah, like I'm dealing with a situation now where I want to sell a property that I'm a joint venture partner on, and my partners, one of them I think is in favor of that, one of them is not, and it's just like we have a joint venture agreement, so it's good. We have that, it cost us about, I don't know, $1,500 to get one drawn up at the time. And a lot of people forgo those kinds of things because they're like, oh, we can save $1,500 because it's like my friends or my family or whatever. Yeah. And I'm always teaching people like, do not avoid that step, because if there is a situation where you have to go back to this document, at least there's a legal roadmap that you can follow and be like, okay, well, in the document, it says this. So, now, do you have to follow that 100% if everyone's in agreement? No, you don't. But I mean, at least it gives you some sort of basis to start the conversation with.
Yeah, no, I think that's smart. And with that, we're just going to take a really quick break for a word from our sponsors.
The Dijon vision is to add value and create beautiful spaces that make a positive impact. We transform homes and lives and believe that everyone deserves a beautiful home.
Our homes are where we eat, sleep, relax, and play. I value transparency, integrity, and trust. If you choose to work with me, you can be assured that business will be conducted honestly and openly. Time is of the essence in this industry, so you can expect nothing short of quick, clear communication from me. I'll keep you informed every step of the way so you feel comfortable through this entire process. And with this said, my service to you doesn't end when the transaction does. As your realtor, I'll not only help you buy and sell your property, I'll also educate and support you along the way. I can't wait to share my passion for real estate with you. More importantly, find you the perfect house to turn into your home.
Hey everybody, welcome back to the Inspire to Invest podcast. I have Darren Voros here talking about his successes and challenges and learnings from 20 years as a real estate investor. Now, one thing I want to know is, what's the craziest thing that's ever happened to you? I always feel it always brings interesting things out.
Well, I mean, I'll talk about a recent situation because it's not been fun, that's for sure. The craziest thing that's ever happened to me is happened about just about a year ago now. Hired a contractor to to complete one of our 8-unit buildings in Toronto. And basically the way that the payment structure was laid out, we had a deposit, which is normal. And then we had a material deposit, which is also not that abnormal in, a year ago when things like steel and glass and wood were even hard to come by. But basically, long and short of it is, we had these 2 deposits that we gave the contractor, and then, the work kind of started to slow down. Eventually it stopped. We tried to get them back on site, get them back moving. But, they were in a position where they had a lot of my money, or a lot of my, projects money, and they just weren't showing up to site. And eventually we had to bring in the lawyers and everybody. We eventually had to remove that contractor from the site. And now we're chasing them in a court battle to try to recoup that capital. So it's, it's a hard lesson to learn. This person was backed by a name, like a brand name that's been in the construction industry for a long time.
Yeah.
But because of that, I probably put a little bit more faith in that company than I should have.
Yeah.
I did my due diligence. There was also a lot of misleading information that person was giving me. So it's hard, right? Because you kind of take things at face value at certain times, and then you dig in a little bit and you get those answers you need to get, but you still can be deceived. And this person is a professional con artist. That's what I've come to learn. They've screwed people out of millions of dollars. And we just happen to be one of those people that's going to be chasing them down. But it's a tough lesson to learn. The project will continue. The project will get finished. The project will be profitable in the end, but it's just a really hard, challenge that I've had to overcome. And really being the one who's spearheading the whole project, it's been a lot of stress and a lot of anxiety and a lot of just tough conversations and tough things to deal with. But it's this kind of stuff happens. And as a real estate investor, you have to, and especially as a real estate developer, you have to be ready and willing to weather the storm, because there are going to be challenges that come up on a regular basis. Maybe not to this scale, but definitely challenges that come up for sure.
So with something like that, with the lesson, like going forward, when you're doing due diligence with a contractor or as a provider, what would you do different now having gone through this?
Well, I think there was a few little things that didn't quite line up. I think one of the things too that I would definitely never skip ever again, and it wasn't even really part of my process then, but just having my lawyers look into the company itself. I mean, because there's oftentimes numbered companies on contracts and things like that, and they might be like operating as a brand name or something like that. It's like looking into that numbered company, and also looking into like what kind of assets do these companies have, right? I mean, that's the challenge in Canada. All these corporate structures, and I have a corporate structure as well that I use all the time, and I use that for liability protection. Yeah. But anybody that's working to hire a contractor, the question would be like, does that contractor own any assets, or does that individual that manages that company own any assets? Because if there's ever any situation that comes up and you've got to go and kind of trying to, let's say recoup your capital, like we're trying to do, if that company doesn't own anything, or that person doesn't own anything, good luck trying to recapitalize yourself at that point. So for me, it would always be looking into the quality of the person. That kind of goes without saying, but also looking into their background and seeing what else they can potentially control, and what their entire financial picture looks like before signing on the dotted line, especially on large contracts, right? I mean, we're talking millions of dollars here. It's not like it's $100,000 renovation to your bathroom or your kitchen. This is a multi-million-dollar project that, if it goes sideways, could be detrimental to you and to your investors who you represent.
Yeah, no, and I think that's so smart. I just understand the recourse that you have if anything ever goes sideways, right? You talked about education. What is some of the best advice you think you've ever had?
I think that one of the things that I learned just recently, and been trying to impart this to as many people as I can, is there's no natural progression in real estate. like I think a lot of people think, well, I got to get a single family dwelling, and then if I want to, I can go to a duplex. And then once I graduate from Duplex Academy, I get to go and buy a triplex, and then a fourplex, and then maybe I get into a 6 and then an 8 and then a 10. It's like, there is no rhyme or reason to that. You don't have to do that. You can go right into buying an apartment building as your first investment. You're going to probably learn some serious lessons if you don't have a mentor or some education behind it, but you don't need to start with a single family dwelling. At the same time, I'm a huge believer in right now in the current marketplace that really the best deals are created. They're not found.
Yeah.
People are still, my students are always asking me like, oh, I can't find any good deals. I'm like, they don't exist.
Yeah.
Like, because
not here, not in Toronto.
Interest rates don't make sense. Property values don't make sense. There's all these factors. So I'm like, if you want to have a good deal, you have to create it. You have to go and find an opportunity where most people can't see it. So like I said to my example earlier, it's like finding a really good zoning code, or some area that is poised for development, poised for, gentrification, or poised for expanding, right? So you want to find those areas, and then you want to go and buy properties, and then you want to create opportunities, whether that's taking a single family dwelling to a triplex or a fourplex. Now you can do that within Ontario and pretty much any lot. Or, if you're in Ontario and you want to, do a new development, anything under 10 units now is exempt from site plan approval. I mean, that's a huge game changer. And if you couple that with, MLI Select financing through CMHC, which is a new program, there's just a lot of opportunities for people, but they're not found. They are created 100%.
Now, for anyone that's watching that's not an investor or a land developer, can you explain why that's so helpful to avoid that step in the process?
Yeah, so the site plan approval, I'll speak to that first and foremost. And that's basically a process that takes anywhere from, if a municipality is good and your consultant team is good, your architects, your engineers, everybody, you might be able to get through site plan approval in 6 months. In my experience, it's usually closer to 18 or 24 months. So that basically, means that from the time you submit your application to the city to say, hey, I want to take this project from a single family dwelling or from a piece of land and I want to create 10 units on it, you're going to add 24 months to your timeline just to get through that. That doesn't give you a building permit. That just gives you, your site plan approval. Yeah. Now you've got to go get a building permit, and you actually have to build the thing. Well, basically what Ontario did with their new Bill 23 regulation was said, okay, anything under 10 units doesn't have to go through site plan approval. So I can basically buy a piece of land if it's zoned properly and I can get the 10 units on there, I can go straight to a building permit. Yeah. Well, imagine the savings of time and money of cutting out all those architects, engineers, everybody that doesn't need to get involved in a site plan approval, and then going straight to building permit. And then couple that with, CMHC's new financing rules, which basically if you're doing a purpose-built rental, then you can get up to 95% loan to cost on a new build. You can amortize that loan over 50 years. And you're getting these incredible premiums, basically, or premium interest rates that you can pay. Like we just secured one on our recent project. It was a 5-year term for 3.53%, a 10-year term for 3.93%. And this is commercial financing, right? So this is really a bit of a game changer in this space because a lot of people used to build and sell because that was the most profitable way to do it. But now there's so many people that are building and renting. And that's really what the government of Ontario and the government of Canada was trying to do with these new rules and regulations, was trying to incentivize more developers like myself to rent units versus selling them. So that's what's happening with those two programs. It doesn't make any sense to sell anything right now. It makes sense to keep it in your portfolio for the long term and rent it out as long as possible.
Now, do you think that obviously we look at it from the perspective that it's great to skip site plan approval? Do you think there will be any negative consequences to that as well? Like putting things into a neighborhood where it doesn't work, or like from a resources standpoint, like do you think there's any downside to that?
Well, I mean, you still have to meet the building code requirements, right? So it's like, okay, I can't go and install a 10-unit building in a residential neighborhood if the zoning doesn't allow for it, right? So you still have to go through that regulatory process. But and you still need a 2-inch water line and a 6-inch sewer line if you've got a 10-unit building. So none of that really changes. What changes is And it makes sense. I mean, a lot of our projects, they're 8 and 10 units. They look and feel like a single family dwelling almost, right? They're same size and scope, like 6,000 or 7,000 square feet. They're probably bigger than your average house, but they're not like these apartments.
Like you're putting an apartment building in
Exactly. And they don't have underground parking. They don't have like site plan approval is really to do with like, okay, where are the garbage trucks going to come into this site? Where are these all where's the fire trucks going to enter and exit? Like that's on a bigger project. You have to figure out all that stuff. On a small project, 10 units and under, it's basically like operates like a single family dwelling. Okay. So it makes sense that they're eliminating that. Plus, what happens with site plan approval is the city, the municipality gets a say in what your building looks like, what it, kind of like the design, some of those other things. So I don't think that the municipality should have any say in what a building looks like. Yeah. If it's like, let's say 10 years, it's going to be a small building. It's not going to be a massive thing. So that's where it's just, cutting that regulatory process. We need to get units to the market faster. And that's the issue. People complain all the time about real estate prices and rental rates going up. Well, it's simple economics. Yeah. There's not enough supply and there is way too much demand. Yeah. How do you do that? You don't raise interest rates. You don't cripple the financial markets. You add more supply. Yeah. And in order to do that, you have to approve projects faster and get them to market faster. If there was more than enough supply, what do you think happens? Demand drops, and so do pricing and everything like that. So it's economics 101. And if people don't understand that, it's a hard thing to try to convince people. But that's why the real estate values are where they are. So it's just not enough. There's not enough supply. Yeah.
Now, obviously, you've got like a healthy portfolio. Like, what would your financial freedom number be? Like, to you, what would be that pinnacle where you're like, okay, I can maybe take a break or take a step back?
I mean, it's a good question, and probably a question that I get asked a lot from my family, for instance, or like, when is enough going to be enough? Yeah. And the answer is not yet. I think I have a number in my head. Like, I think for a while, for me, it was like I was striving for like $5 million net worth. And I don't want to sound pompous, but $5 million is not a lot of money anymore, right? I mean, people used to strive to be a millionaire. I'm like, millionaire is almost the baseline now, so for me, I think it's less about net worth, I think for me, and more about what is that annual or monthly income that I'm striving towards, and passive income that I can then step back and say, okay, this really supports the lifestyle that I want to live. Yeah. That's the number that I'm striving for. And, for me, it's there's a lot of things that I'd like to add to my lifestyle, and I'm trying to work towards that. But I also love working. I think that's the other thing too, that people are afraid to admit, is that I enjoy work. I spend 4 months a year in Costa Rica in the winter, and everyone's like, oh, it must be nice to be on vacation. I'm like, vacation? I'm like, I just work from a better location. That's all it is, right? Yeah. And so, yes, I take my time, and I love spending time with my friends and my family, and I love walking my dog and going to the gym and doing yoga and all those kinds of things. Yeah. But I also would be bored out of my mind if all I did all day was like sit on the beach. I would not be a good person to be around if that's what I was doing. So
well, I think that, everyone needs a sense of purpose, right? So I think at the end of the day, investing gives you that, but it also gives you the flexibility and the freedom to work when you want, where you want, and how you want, right?
For sure. Absolutely.
Now, is there any particular quote that you find inspires you or motivates you?
I'm not big on quotes. So that's a good question. I don't think there's anything in particular. I mean, I always was, I still am a sports fan. So I love the Wayne Gretzky quote. I think I'm going to paraphrase it and probably screw it up, but he said, you don't want to go where you think where the puck has been or something like that. You want to go to where the puck is going to be. And I think that's similar in real estate, right? I think you don't want to look at what's happening right now in the marketplace. If you looked at what's happening right now, people would be scared out of their minds and say, oh my gosh, like the world is going to crumble. Well, no, you have to look at what's the market going to look like in 12 months or in 24 months. And you want to be ahead of the curve. You want to be setting the trends versus trying to adapt to them, and that's one of my favorite things about the real estate market is it's pretty predictable if you look at the data.
Yeah, no, amazing. Now, obviously you have created other courses specific to land development and all of that. So I'm sure there could be people that want to get in touch. what is the easiest and best way for anyone to get in contact with you?
Yeah, it's simple. I mean, there's two things that I always encourage people to do. One is check out my YouTube channel. It's YouTube, I think, /Darren Voros.
Yeah.
I've got, I think 400 videos on my YouTube channel, something like that. I just surpassed 1 million views. It's something that I put my heart and soul into and really don't get a whole lot in return, but I love it. I love helping people. I get that all the time. I get stopped on the street pretty regularly and be like, hey, I love your videos, which is like so cool. The second thing they can do is check out my website, darrenvoros.com, and all my course information's on there for all my development courses and everything else that I do.
Okay, great. So we'll leave all your information below. And thank you for your time today. If you like what you've just seen, make sure you subscribe to watch future videos, and you're following along at Inspire to Invest podcast on social. I promise my voice will improve with future episodes. And remember, when you invest in yourself, the sky's the limit. Thanks for tuning in.
Thanks again to our sponsor, Dijon Properties, for bringing us this episode of the Inspired to Invest podcast. The views represented on this podcast are for general information only and does not constitute investment or other professional advice or an offering of securities. The host and guests featured on Inspired to Invest make no representations as to the performance of any particular investment. Should you decide to make an investment, you are responsible for conducting your own review and analysis. It is recommended that you obtain independent legal, accounting, and tax advice from licensed professionals.